Hey, as we come into harvest, we just wanted to go back over some of the insurance policies and how your revenue protection policy will work. We're going to look at ECO as well and what sort of trigger prices we might be at, especially on corn, as we got pretty close for some policies in here. So keep in mind, everything we're talking about is for education and example purposes. Make sure you guys understand and know your own risk tolerance as we go through the information. I got Craig with me here today. He's our insurance specialist here in the office. Can you kind of bring us up to speed again on where we're at for the
Sure.
spring?
So we're gonna just take a look back, and we're gonna look back at what our spring prices for corn and soybeans. And you have to remember the spring and the harvest price are both set based off of using December 25 corn and November 25 soybeans. So the spring price, that price was set during the month of February with the average daily price for December corn and November soybeans. And for the spring price, we ended up with a corn price of 470 and a soybean price of 1054. Now, the harvest prices will be determined during the month of October for December 25 corn and November 25 soybeans.
Right. And at this point, it's looking like the spring price is probably what's going to hold.
Yeah, you look at both of these. I mean, soybeans, we're not, that far off that 1054, I think, today trading. But you look at corn, we're off that 60 to 70 cents off of corn. So there could be some triggers on the corn price because we are down about that 15% on price right now.
Yeah, so I have a producer. We were going through his insurance policy. He's got 85% coverage on a 200 bushel APH. What could he potentially be looking at for
So,
insurance?
so when you look at him, all right, when you figure this out, he has a $799 per acre guarantee. All right, so if he actually harvests 220 bushel corn as actual yield, the trigger price or the December price is going to have to get below 363 before he has a payment.
Right. So his current payment off his APH is 399, but then the fact that he overproduced compared to APH is what lowers his
Correct.
payment
You're
overall.
absolutely correct. Yep. As your APH goes up, the price has to continue going further. It's no different than if you have a poor crop and the price goes up. It'll help you too sometimes. So.
Yeah. So there's we've got a little bit of a matrix here. Do you want to go through that?
Sure. What this is a corn payment matrix that we're using. This is for your revenue protection policy, and this is based off the 200 bushel APH. Based at 85%. So if you harvest 200 bushel corn, at 360 price, you're going to get $7 a bushel or $7 an acre for your payment. And as you go back, as your yield goes down, if you're at 200 bushel corn, like you said, at a 380 price, you get a $39 payment per an acre payment. So, as your price goes down and your yield goes up, the payments go down. But this is just a nice matrix for you to look at to help you determine, where your payment range could be.
Yeah. And then what? How does that ECO rider affect this?
So the ECO endorsement or rider, also is based off of revenue, but it's based off your county yields in the same price. You got to remember ECO kicks in at 95%, so the payments kick in a lot quicker, at this level. At $4 corn, if your county average is, 210 bushel, which is, 5% above the 200 county average, you're still going to get a good decent sized payment with ECO.
So, at the end of the day, we've kind of always stressed your insurance isn't a price floor. We want to use it to protect bushels, give us confidence to market ahead. At the end of the day, if you end up running into issues, you'll get an indemnity payment in some respects to offset that.
Correct. That's what we'd use it for, is to help offset bushels that you don't raise that you have sold.
Yeah, and I think where people get lost sometimes is when they assume it's a price floor. You have to remember you're only getting 75, 85% of that spring trigger price, which can be a lot lower. And then when you factor in production, that can make a big difference.
Yes, that can make a huge, huge difference. And as we said, with all this, if you have any questions on these, or if you'd like to see what your scenario would look like, don't be afraid to reach out to us in the office. You can get a hold of Patrick or myself, and we'd help you walk through these matrices, to see what kind of payment you got on corn or soybeans, just help you determine what's out there, what's available.
Yeah, that sounds good. Anything else that you want to add to
No,
that?
just, wish everybody a safe and happy harvest, and good luck getting everything brought in from the field this fall. And if you have any questions, on anything, we're always here to reach out to us.
Thanks for tuning in, guys. Make sure to like the video, subscribe to the channel. We always enjoy making the content for you.